Welcome to Business Game Changers. I'm Sarah Westall, and today we are going to talk the economy. We're bringing back CEO of Miles Franklin, Andy Schectman, and he's going to hopefully shine some light on what's going on with this economy, what's going on with the crazy stock market, what's going on with your U.S. economy, the debt, and how we fit with the rest of the world and the economy overall, the dollar, how does that fit in the world? It's going to be an eye-opening interview. And I want to remind you, because I won't be able to get to this whole interview. There's going to be about 15 minutes I won't be able to get to. So I want to tell you that you can reach Andy at milesfranklin.com. He has a newsletter. It's not a sales newsletter. It's information that they send out, I believe, 3 times a week that really gives you insight on what's going on with investing, gold, silver, and all the geopolitical issues going on with that, and the economy and the stock market and where to invest. And they also have a blog that you can go to, which has articles that they post on a regular basis as well at milesfranklin.com. So I want to make sure I get that in, since I won't be able to get in with the interview. So now let's welcome Andy Schectman to the program. Hi, Andy. Welcome back to the program.
Hi, Sarah. Good to be here. Thanks for having me.
I'm so glad that I had you. You can bring, I hope, crystal clear views to what's going on in the marketplace right now for us, which I know will be difficult to do, but I'm hoping that you can at least enlighten us a bit. And I want to start off with something that is just so out of whack. Why do you think the stock market is so high right now?
Well, I mean, I think there are a lot of reasons that the stock market is so high right now, and you could see, quite frankly, the stock market go much higher before it's all said and done. The question also lies in value. Is it being propped up by the Fed? Is it being propped up by hedge funds? I think most of mainstream America is not in the stock market the way the indices would lead one to believe. I think it's kind of a professional game these days. It is somewhat also the barometer for the health of the economy, and if I were a central planner, certainly it would be in my vested interest, I think, to keep the markets looking as though they are healthy. And quite frankly, Sarah, I wouldn't be surprised if you saw the market double from where it is right now. You see 45,000 on the Dow at some point, as some people are talking, really doesn't seem that crazy to me when we talk about hyperinflationary trends and when we talk about money creation. And, quite frankly, I've been doing this for long enough where I've seen the NASDAQ double in 1 year before. To see the market double from this point forward wouldn't surprise me, but it's really a game that I choose not to play because of all the associated risks that go along with it.
Well, do you think that the market is really being propped up by inflation at all? I mean, because if it doubled, it would be a hyperinflation situation.
I think you are beginning to see inflation find its way. The first place you're going to find it would be in the markets like that. It hasn't seeped out into the real economy yet, and certainly we may see that. But yeah, I think that is part of the deal. There's been a lot of money creation, and the problem is that the velocity of all of that money has been holed up in the banks, and the money that has made its way out has found its way into higher industry prices, no question about it.
What do you think about gold and silver being so heavily manipulated? What is going on there?
Well, that's a call in and of itself. In terms of, we could talk for a long time about that. I think that if I had to guess what is happening right now in terms of gold and silver manipulation, I think it used to be centered around greed through a term in economics called Gibson's paradox. Gibson's paradox is the inverse relationship between precious metals and real interest rates. And in the 90s and the latter part of last decade, we saw the Western central banks wanting to keep people invested in dollars and in Western currencies, making loans and transacting business as usual. And with low interest rates, Gibson's paradox would say that gold should be high. And so the Western central banks, for many, many years, suppressed the price of gold to invert the laws of economics as it pertains to Gibson's paradox. They did not want people running to buy gold, the canary in the mine shaft, if you will. It was an easy game for the Western central banks and the Western commercial banks to manipulate the price of gold when nobody wanted it. Way back when people were just happy buying dollar-based investments, it was an easy game to squash the price of gold by forward selling it into the marketplace. And the commercial banks would take the proceeds of those sales when no one was buying it anyway, would buy treasuries, further pushing down interest rates and making the spread between the tiny interest rates that they were charged when they were leasing the gold from the central banks versus what they were making on the purchase of treasuries. Everyone was winning. The central banks were happy. The commercial banks were happy. Everyone was winning except those people who owned gold. Well, that was easy to do when no one wanted it. But if we fast forward to where we are now, where the world is certainly a scarier place, and people have been looking, I think, to gold for years now, quietly as a way to protect themselves and hedge their positions, we see a whole different phenomena. I look at J.P. Morgan as an example of said phenomena. What I really believe is happening right now is that the big money interests are using misdirection. You see, one of the biggest problems that people make when they try to figure out what's going on in terms of the marketplace is to assume that markets are transparent. Well, they really aren't. They aren't transparent whatsoever. In fact, big money will do everything that they can to misdirect. It's like a point guard coming down the basketball floor. He or she will look one way and pass the other. That is classic misdirection. It's faking a handoff to the left, and the entire offensive line moves to the left, but the one tight end who's tiptoed off to the right flat is standing open, and the whole play is moving to the left, but that one guy is off to the right. That is misdirection. That happens time and time again, not just in sports, but also in business and in investing. And what big money has been doing is misdirecting the public, creating a perception of reality by using levered futures contracts to create a perception of reality. And as it pertains to gold, I'll give you an example as what J.P. Morgan is doing. Over the last 3 years, J.P. Morgan has increased their silver physical position over 105 times to over 600 million ounces of physical silver. It's the largest position the world has ever seen in terms of a physical position. They have done this while they've also become the largest short position on the COMEX market. So they short the heck out of the paper price, creating a perception of reality, driving the price down below 50 and 200-day moving averages. And what that does is it signals to the hedge funds and to the mutual funds and all of the advisory services who use and employ technical analysis, which is the majority of the financial universe. It signals to them that commodities bad, equities, which they goose to levels never seen before, as you're talking about why is the stock market so high, they goose the equity markets, they suppress the commodity markets, they create a perception of reality. I believe that they are doing this not just in gold and silver, that they're gobbling up physical gold by the tonnage, not just J.P. Morgan, but also Goldman Sachs and other big money centers. But I believe they're doing it with fossil fuels, oil. They're doing it with other
all
metals
commodities.
like all commodities, aluminum, copper. If you were trying to build stockpile, a war chest, a cache of things you would need to go forward in the future, you can't just be as straightforward as gobbling it all up, going into the marketplace with open bids and buying everything, because in doing so, you cut off your nose to spite your face.
Why do people still believe them? I mean, it's just crazy that they can do one thing, and at least with basketball, everybody's like, oh, we fell for it. But it's like nobody's going, oh, we fell for it. They just keep falling for it.
Yeah, I know it is, but a lot of it has to do with the misinformation and the lack of mainstream reporting on this kind of issue. And, people, whenever they hear manipulation, a lot of people will just shut off and stop listening and paying attention and think it's conspiratorial. I think the truth of it is, and all your listeners should check out a website called GATA, GATA.org, the Gold Antitrust Action Committee, where their chairman, Chris Powell, one of the best guys I've ever met in this industry, is famous for saying there are no more free markets, just manipulations, which is true. I think that big money is manipulating all of the markets for a reason. It used to be for gain and greed, and now I believe it is for repositioning for whatever the world brings coming down the road. So I think these are certainly interesting times, but free markets are a thing of the past as far as I'm concerned.
Well, what would happen if they let gold and silver rise to its correct market valuations? And what are those market valuations?
A whole lot higher than they are right now, certainly, when you use inflation-adjusted dollars from 1980. Certainly gold should be, many times what it is now, 2,500, 3,000, 4,000, and silver should be much higher too, just based upon even if you had gold where it is right now, which really isn't right, the historical number for silver should be about $75 an ounce, just based upon the historical and geological relationship of 16 to 1 between the two.
So why are they holding silver so much farther down than gold?
Well, why does J.P. Morgan have the world's largest stockpile amassed in their house account? Because silver is very, very, very important metal and indispensable. And so at some point, the bottom line is that at some point the physical demand overwhelms the ability for the Western central banks to manipulate the price. Perhaps it's the Shanghai Gold Exchange, where it's a cash and carry type of market where there are no futures prices involved in buying gold and silver at the Shanghai market. And so at some point, if the Western mechanism for pricing gets so far out of whack, it creates an arbitrage situation and very quickly is rendered neutered or obsolete. So I don't think we're very far away from seeing the manipulation start to end. Truthfully, Sarah, the only way that someone can successfully manipulate a market over an extended period of time is to push it in the direction that it is going. And they are fighting a global tide of demand in a world where, the need to own gold and silver has never been more acute. I think it's a difficult chore to try to hold the price back artificially in a world where no one is buying gold and silver and everyone is focused on dollar-based investments and stocks and bonds and what have you. Then, heck, manipulating gold is as easy as taking candy from a baby. So I think things are certainly starting to change.
So they just can't hold the dam back much longer. You think it's eventually the pressure is just building and mounting, and it's eventually going to break here.
Yeah, and I think it'll also gain too much attention. And what was an easy trade is now becoming something that will be very difficult because of, I think, the the instability that we are beginning to see, and we'll see more in all of the world's currencies, in the euro, in the yen, in the dollar. There are no good choices any longer. There is nothing backing any of the world's currencies, and in a race to the bottom, and all the instability we're seeing in Europe, which could very quickly lead to problems with the euro, and that influx, that rush of cash out of the euro could very quickly propel the Dow Jones up to, double from where it is right now, very, very quickly, like a flash fire. But the point is that I think all currencies are inherently meant to die. There are none that really have ever lasted more than 40, 50 years. And so I think that, more than ever now, people need to be cautious. And I think more than ever, gold and silver have a significant part, or should have a significant part in people's portfolio, for nothing else, because of all the uncertainty. I like to break it down real easy for people, Sarah, and look at it this way. A trillion seconds ago was 31,688 years ago. And we have a $20 trillion debt and $150 trillion in unfunded liabilities in a country whose manufacturing base has been decimated. And although President Trump says he wants to reinvent our manufacturing base and lower taxes in a country where tax burden is what it is and a manufacturing base that is left, we don't make anything any longer to recover in a country that doesn't make anything, that is taxes its wealth creators the way that it does. The game is all but over. It's just a matter of time and how it all plays out. And that's probably why the markets are being manipulated to reposition for the big money, the insiders who understand what's happening, allowing them time to reposition their portfolios, their assets, and because in a game like this, things get distorted, especially when some of the participants know the outcome of the game. So things are distorted and moving in a direction that sometimes does not mesh with logic.
Well, are they all shifting to the east? I mean, because if we lost our manufacturing base, we have debt that's crazy. The East has a manufacturing base. They don't have debt. They have surplus. They have cash sitting around. Are they shifting to the East?
Well, yeah, most of the major gold outflows have moved to the East, as has the increased standard of living, the middle class, to the East is without question moving in that direction. And so they, while they have their own problems to deal with, they also have, trillions of dollars, if we're talking China, in reserves that we don't. And while they have debt and perhaps overcapitalization, and they've done things that expanded too quickly, they may have speed bumps. They do have a couple $1 trillion in reserves, and we, on the other hand, have 20 trillion in debt on top of 10 times that in unfunded liabilities. So yes, the standard of living is moving eastward, and as is the wealth. So yeah, I think you could argue that perhaps we've seen the best that this country has to offer, at least in terms of standard of living, for a while. If you look at, just simply speaking, if you look at debt, manufacturing, and the ability to right the ship, I would argue that's probably true.
Well, some people think that technology, the big boom in nanotechnology and just the massive new that's coming out of that world could help turn the ship locally.
Well, sure. Yeah, maybe. And I'm as patriotic as the next person, and I'm also optimistic. So I would like to hope that be the case. There's no question America is still the finest place in the world to live. It doesn't erase the fact that we've had a very irresponsible leadership that has indebted our future generations to the point of absurdity. And when you realize how big those numbers are and the inability to pay it off grows with every day, it's frustrating. But yeah, in terms of quality of life and freedoms and what have you, you can gripe all you want about our erosion of freedoms or what have you, but it's still it's still probably the best place in the world to live, and I don't disagree with that. But it doesn't mean that we shouldn't prepare ourselves for mathematical certainties, and they may be able to change the outcome slightly, but I would argue not in a material fashion, and not enough to not take some of these warnings to heart.
Well, I don't know why you can't look at the government's balance sheet like you would at any other business balance sheet, and it's pretty obvious, right? To people that can see the business model of the country and see, oh, we have some major issues here and we need to fix it. But Congress just keeps going along as if nothing's wrong. It's just completely mind-boggling.
Yeah, it is mind-boggling, no question about it. But it's to make those hard decisions would require an awful lot of pain, and it seems that every time that we've been faced with making hard decisions, we kick the can down the road. And so, hard decisions would be stopping entitlement checks and welfare and food stamps and things like that, or certainly curtailing them or imposing restrictions on them, making hard decisions that are unpopular and don't get people elected or reelected, certainly. I don't know why we continue to live with our head in the sand, as most people do, but I'm often surprised when I cite the statistic of how big $1 trillion is. No one really gets it. No one's really heard that. Most people have never heard the fact that $1 trillion seconds ago was almost 32,000 years ago. They don't understand how big our problems really are. And I don't know if that's anyone's fault per se, but I would argue most people really have no clue just how big a problem this country faces.
I think our priorities tend not to be on the things that are the most important. And I don't know if people believe the economy. I don't know if they see the bigger picture and see that as the most important thing. But do you think that the dollar will ultimately need to be reset? Or do you think there will just be a complete collapse for an new organization to occur?
Well, I think the dollar resets after a collapse.
So you don't think it'll happen? It won't be organized reset because we just can't get our act together to that point. It'll have to collapse to reset it.
That's correct. And I think that's, the conspiratorial side would say that's all planned, that the powers that be are hoping that that's how it happens, and that they milk as much as they possibly can with the debt that we've incurred that can never be paid back, with a dollar that ultimately collapses, and when it does, they reset. There are those that would say that ultimately the Fed has no choice but to inflate or die, and at some point, when the dollar collapses, whether it be through massive inflation or default, then you see a reset. But in that environment, there is nothing orderly about it.
Yeah, because we can either massively inflate our debts away or we can just default our debts away.
Correct.
And do you think massively inflating will be less painful? Because they're going to go through the less painful route, I'm assuming. So would massive inflation be less painful than a mass default?
Well, ultimately they're both very painful, but governments have always chosen the path of inflation over default.
Because it's just, they believe it's less painful. Or it's easier to, that seems like the stream just runs that way.
All at once. Yes, it doesn't happen all at once, and it allows them time to move. Even
and to milk it, maybe.
Yes. I think they would choose inflation 10 times out of 10 over default.
Well, do you think the dollar will then ultimately be decoupled from oil, right? Because if it inflates out of existence, then there would be a decoupling from oil. Do you think that's ultimately good for the world, or do you think that's going to end up hurting the United States?
well, what's good for the world doesn't mean good for the United States. I think there's a high likelihood you could see oil decouple from the dollar. The petrostatus dollar that the petrodollar status that the U.S. dollar enjoys is what has enabled this country to get fat, so to speak, in that every country needs dollars to buy oil as the world reserve currency, and OPEC struck that deal with the United States to only take oil or only dollars for their oil. If that were ever usurped, yes, absolutely, that would be probably better for the world, but materially worse for the dollar and for the United States standard of living. And so ultimately, I do see that happening. I think that the oil-producing countries will want to work with the Chinese, let's say, or other countries, and accepting other terms or other payments, whether it be gold or a new world reserve currency or special drawing rights or the renminbi, whatever it may be. I think that the world is probably annoyed that, including the oil-producing countries, that they have to accept only dollars for oil. So, yeah, I think that's probably in the cards, and no, it would not be good for dollars. It would, or for the U.S.
Well, do you think it would ultimately usher in a new energy age? I mean, we could see alternative energies at that point then. We wouldn't be tied to oil.
Well, I think we already are beginning to see new energy, a new energy age, the rise in battery-powered vehicles and what have you. But yeah, if all of a sudden the dollar lost its petro status, then absolutely it would certainly incentivize, I think, people or incentivize governments to find alternative energy sources. One that and of course that would also mean exploring here in the United States alternative energy sources and exploring for oil in Alaska or what have you. And these are all things that will probably will happen, and quite frankly probably should happen. But I think that there is a high likelihood that you will see oil being accepted in other currencies, and that kind of being the beginning of the end for the U.S. dollar in terms of it being the sole world reserve currency.
Well, do you think that will end a lot of the conflict in the Middle East? I mean, because right now it's a hotbed of conflict realistically because of oil and things.
I don't. I mean, they've been fighting for thousands of years. It's a religious war.
But do you think we'll pull out? I mean, we'll just let them fight and not worry about it anymore? Or do you think we'll still engage?
Well, we sure should, because, the truth of it is that we receive a very, very small portion of the oil that we use in this country comes from the Middle East, but it would upset the entire apple cart, so to speak, the world price structure. And that's why we have such a vested interest in being there. Quite frankly, I'm the type of person that wish we had nothing to do with it, and I wouldn't care if we paid more money for gas as long as we were out of the Middle East. So hopefully that does happen. But I don't think I don't think anything will stop the fighting. When you've been fighting for 5,000 years, and certainly oil is only a small portion of the animosity and the anger.
Well, when anger builds up and you kill my family, I'm going to kill yours kind of thing. But I agree with you. I don't want the United States to be part of that, because we just get sucked into something that you can't win.
We're just a focal point of it. That's right. And so certainly it would be better just to be away from that and be out of it. And, it wouldn't be such a horrible thing if we had to pay more money for gas and oil, but yet didn't have to worry about terroristic threats and our brothers and sons and fathers and daughters being killed overseas for a war that really we have nothing to do with.
So do you think Trump will be able to manage a turnaround? And I think we've kind of talked about what we're ultimately going to see, but he's really trying to do this. So what do you think he's going to be able to do? And is it even possible for him to make a big difference?
Yeah, well, he's certainly trying, and I think one of two things will happen. Either he does succeed and his agenda does succeed, and in that scenario you have inflationary, if not hyperinflationary, probabilities in that he favors doing all sorts of things to build the infrastructure. He favors the inflationary path, if you will, to build up the military, to spend on infrastructure, and the reduction in tax receipts should, in and of itself, between the two, be very inflationary. If he doesn't succeed, which would be similar to what happened to Herbert Hoover. In fact, the similarities between the two are striking. I think you'll see that outcome probably, and that would be a collapsing market and a falling dollar and rising interest rates. If you look at what the similarities are between Hoover, you see a successful businessman who was not a politician until he became president, who favored isolationism, whose first act in office was to deport 100,000 illegal Mexican immigrants, who had investments all over the world, just like Trump, who came into office in the 30s when the easy money policies of the Fed in the 1920s created a stock market bubble. Sounds familiar so far. And then they kind of pulled the rug out from underneath them and interest rates rise and the easy money disappeared. Still sounds kind of familiar. And then the stock market collapsed and he was forever to blame for it. This is a guy that wanted to come into office and build infrastructure like the Hoover Dam. And so, you have a guy that has the same agenda, that has the same background, that enters into an environment that is incredibly similar to the one that Hoover inherited. So, history has a funny way of repeating itself. I think that chances are that with his best intentions, nothing really material happens except seeing some higher inflation. And if it doesn't pan out, you'll see, I think, second half of the year where the stock market probably runs into some serious trouble. And as the economy runs into bigger trouble, Trump will forever be blamed for it.
Well, it's too bad. If you could get everybody focused on the right intentions and get people focused on new industries and high tech and get and manage the inflation and the reset, we could actually not hurt our citizens. But if we just decide to fight the whole time, it's going to be a nightmare.
Well, I've never seen such a time of animosity and a dichotomy, a separation between families over Trump and his policies. In fact, it's I would have thought that was true during Obama, but it's to me it's far more true now. Nothing compared to what it is now, and it's to the point where I really don't even talk about what I do or my political aspirations ever until brought up to me, because it typically, if someone is not a Trump supporter, it leads into typically something ugly. So I think these are very, very interesting times, to say the least, and that's a Chinese curse.
It's pretty incredible. So what do you think of cryptocurrencies? Are they a safe investment or not?
Not for me. They're not. There are those that would disagree with me. For me, anything that is tied to the internet like that, I really don't have faith in. And I think anything can be hacked, and maybe I'm naive in that, but they're not for me. I think that to me it's somewhat of a fad. I think that when people can't explain to you more than anything what it is and how it's valued, even the people who are supposed experts, I want nothing to do with it. So for me, it's nothing more than a fad. But we'll see if that's right or not.
Well, I know that there's some governments that are fairly serious about wanting cryptocurrencies just so they can control everybody.
Yeah, because they want a cashless society. It's less for the reasons that cryptocurrency stands for more of a libertarian free society, free of government intervention. The governments want it simply so that they can track everyone's whereabouts and you rode a black market and the whole 9 yards. But I don't like to have to be reliant upon the internet or something electronic for to have money. And some would argue it already is that way, as money in the bank is nothing more than a digital bookkeeping entry. I still think that cryptocurrencies, at least for me, are far more nefarious than they are beneficial.
Well, I know people say that blockchain is very secure, but China is spending a lot of resources trying to crack blockchain. And some people that I've talked to said that it's possible unless they do some things to secure parts of it.
Look, I watched a movie, I forgot the name of it, not too long. It was a documentary, and it was just out about how U.S. and Israeli intelligence infiltrated the Iranian centrifuges by computer. They infiltrated one of the highest security places in the world by computer, and were able to hack and destroy their centrifuges from
0 days
miles away. Yes, and it was a great movie. And my point is if that can be hacked, then certainly my coin wallet with my cryptocurrency can be hacked too. And again, I take it as a very simplistic view, but I don't trust it. I have yet to find anyone who can explain to me really what it is and why it has value. And I'm not the right person to ask that question, other than to say I think that anything that relies upon a computer for valuation, I think is, not something I want to be part of.
Okay. So what should people be doing now to prepare for market turmoil? Well, one thing that, before I get into that, I want to address silver. Cliff High, I want to address it again. Cliff High I've had on recently. He thinks silver is going to go over $600 pretty soon. And then he thinks it's going to go to the stratosphere. He doesn't say the peak, because silver is a very important metal for your industrial use. And so it's so far out of whack right now. There's less of it available than gold, and it's very important for business, for manufacturing. Do you agree with him? And is it the best investment out there kind of thing?
Well, yeah, I think it is a really, really good investment, and that's why J.P. Morgan is doing what they're doing and amassing the largest position the world has ever seen. Mm-hmm. You see, the reason that one of the reasons Cliff would say that is that even though geologically silver is supposedly 16 or 15.5 times more abundant in the earth than gold is, most of the low-lying fruit over the last 100 years has been plucked already, and so you have to dig deeper and go further, and it's a byproduct metal, mostly through metal mining of other metals, and there's just less silver to be pulled out of the ground nowadays than used to be. But really the reason he would say that is that over the last 80 years, anything that conducts electricity, anything whatsoever, has a modicum of silver in it, whether it be, the first refrigerator you opened when you were a little girl, to the first hairdryer you touched, to the first calculator you ever used, to any of the handheld video games you played when you were 8 years old, or anything, the simple light switch you touched, all that stuff has silver in it. And even if it's only 1/8 of an ounce or 1/50th of an ounce or whatever it is, you will find it on every motherboard. And because for all of those years, it wasn't economical to pull that amount out of said motherboards, all of that silver that's been used in industry over the past 75, 80 years, the majority of it are in landfills, forever gone. And if it were gold, it would make sense to pull a fifth of an ounce out of a motherboard of a refrigerator or a black and white TV or a hairdryer or whatever it may be. It would make sense. But, to pull 1/100th of an ounce of silver out of a broken phone doesn't make sense. So that silver is forever gone. And so what he's really saying is that above ground supplies are more scarce than gold, and by a large degree. And someone like J.P. Morgan, you're dealing with the most influential, well-informed, well-funded trader on the globe. Well, they're loading up on it because maybe they realize this to be the case. And so before it becomes common knowledge, they want to develop the world's largest position. And they do that by suppressing the price and at the same time suppressing interest, because people really are interested in something that is moving, because people are motivated by fear and by greed. And if, feared that the price is going to keep going lower, they look the other way. If it were moving up higher, they would jump on the same trade and crowd J.P. Morgan out. So instead, J.P. Morgan keeps the price at these levels with great volatility, waiting for the shoe to drop, and at the same time, they amass the world's largest physical position without anyone noticing.
So they're artificially keeping it low so they can buy it at a really low rate and keep everybody away from it.
Right, and the volatility creates so much fear that people aren't willing to jump in, even though the price is low, because they keep seeing these big waterfall drops, not too low, but waterfall enough. Because if it's too low, then people will buy and forget risk because they know it's just too good of a deal. But if they keep it right at or about the cost of production or a little lower, with great volatility and below the moving average level, 50 and 200 day. You keep the hedge funds and mutual funds out, you keep all the advisors out, and the volatility freaks people out. And so no one jumps into the game with them. So they have the ability to amass 600 million ounces when no one's looking at subsidized prices. It is misdirection. It is misdirection through price. And so that is how they're able to do it. They misdirect the public and the investment world through price and fear that the volatility will fall to the downside and people will go broke. And that's why they don't jump in with both feet. And so anyways, I think that is the key to the game right now, allowing big money to reposition themselves until one day people wake up and say, my God, how did it get so high? I didn't even realize it. Well, that's when the big money has repositioned itself appropriately, and then will make as much money on the upside as they did on the down all these years. And this volatility that they've injected along the way allows them to accumulate when no one else is looking in the right place.
So the theme of today's show is really just mass redirection. I mean, if you think about it, that's really what's going on right now.
Any game that you've ever played where there's an opponent, the whole object is misdirect. Whether you're playing chess, where you throw a pawn up one side so the queen can come around the backside, flank your king, the other person's king, or baseball or basketball or football, any game where there's an opponent, there is a large element of misdirection. In baseball, there's hidden signals and pick off moves, and it's all trying to misdirect the opponent, catch the opponent off guard. Well, the same thing is true in investing. And you misdirect the opponent to create a reaction. That's why there's a whole school of investment thought centered around psychology and the way markets react. Elliott wave theory or Kondratiev wave theory. Wave theory is specifically centered around market behavior, psychology, the way people react to things. And so, there's no question that the big money is adept at manipulating people's psyches. And why do people keep doing it? They never learn the hard lesson. And the big money knows the way that they're going to react. It's predictable through the manipulation of price. And what people are not focusing on enough is fundamentals. Because fundamentals will tell you be damned with the price. The fundamentals are such that, it's pretty hard to not expect prices to move much, much higher. But in the meantime, the manipulation wreaks havoc on your mind. So your mind and your heart are moving in opposite directions. They're tugging at one another. Your gut says and feels one thing, and your eyes and mind say, well, why isn't this happening? That's the manipulation that allows the big money to create the perception of reality, that allows them to reposition themselves without cutting off their own nose to spite their face. This is a very high-stakes game, Sarah, and in order to win the game, you have to, I guess, they have to do a little lying and cheating.
Well, and that really makes sense because everybody's wondering, well, nothing's happening. There hasn't been a collapse. So they're thinking that the world is all right, and it couldn't be farther from the truth. It means it's even.
Well, that's just it.
Yeah. So
that's just it.
So what should people do to prepare for market turmoil so that they're okay through this messy situation that will ultimately occur?
First thing I would do would be I'd have a few $1,000s or more in small bills and cash in your home, 5s, 10s, and 20s. Probably nothing much bigger. 50s or 100s are too big. At least a few $1,000 worth, if not more. I would have small silver and gold coins at home.
How small?
This may not. In gold, I 1 ounce is the best buy, but I like the 10th and quarter ounce coins. 1 ounce silver coins are junk silver, dimes and quarters. I would minimize exposure to the U.S. dollar as much as possible, and if that means making a heavier foray into precious metals, so be it. I think U.S. dollar right now is really that's where the risk lies. I would. This may not be the most popular thing to say, but I would certainly own a handgun or two, and enough ammunition to protect my family. I would own enough food and water to last a month or two if things got crazy or markets broke down or infrastructure broke down. All of these things that you talk about, or I'm talking about, that people may think you're crazy to do it, but when it happens and when you need it, that's when it all makes sense. And it's not like you ever drive home and say, damn it, I paid my fire insurance premium today and my house didn't burn down. I think it's important to protect yourself and your family, and insurance is by definition, you pay for you pay a premium for a very small risk. And if it happens, you're damn glad you have it. And if not, well, so be it. You can eat the food, you can spend the gold, you can, keep the gun to protect you someday. Hopefully you never ever need to even shoot it. I just think that right now you need to take steps to take care of the what ifs, and that I would center around, cash, gold, gun, some food and water, and I think you have all your bases covered. And if you found that you prepared and there was really never any reason to, so be it. Your blood pressure will be lower. You will know that you've done your responsibility and protected your family best to your ability, and so be it. And if it does turn out that you needed some of this stuff, you'll be damn glad you have it. And really the bottom line is, Sarah, that everyone in this country over the last 50, 60 years has lived under the birthright that it's our birthright to live better than our parents and our grandparents did, and none of us have lived through hard times really, and that could very easily change. The fundamentals, the mathematics would dictate that at some point will change. So protecting yourself and your family for those inevitabilities is a good idea, and I think your listeners would be very glad that they did, and And the best case scenario would be that they prepared unnecessarily, that they never had to. And that's a good thing. And if not, they'll be damn glad that they took the time and the effort to prepare a little bit.
Well, let's talk about the hyperinflation and what would really occur. How long does that take? If it hyperinflates, from what I understand, it can happen overnight. It's happening slowly, but then it can suddenly just trigger and happen quickly. How long of a period, based on other societies, does that take before the country kind of works itself out of its complete mess?
Well, it starts out kind of like a slow leak, a trickle. Slow leak turns into a trickle, turns into a steady stream, turns into a deluge. In that, I had a friend who was a car enthusiast who called me from Argentina a decade ago when they were experiencing hyperinflationary problems, and maybe it was even longer than that, 15, 18 years ago, I don't know. But he was at a Ferrari dealership, and they were erasing the prices. The prices were being listed in chalk, the cars, because they kept changing the prices so fast because the currency was falling so fast. I think that it's a hot potato type of situation, in that, once it fully starts to manifest itself, as if all of a sudden you saw mass dumping of dollars and interest rates spiking and the dollar is starting to rapidly lose value, it happens very quickly, in that people are scurrying to buy anything of value, and that's when you see currency controls. And this is where currency controls would happen, and this is one of the reasons why we like our offshore Canadian storage account so well, because at Brinks, which is completely non-reportable legally. It is 100% invisible according to FACTA and FBAR. It is compliant. So it's invisible. No one knows it's there. But if you saw the shit hit the... Sorry, I shouldn't say that. If you saw the you-know-what hit the fan with the dollar, the first thing that the governments would do would be to enact currency controls, where they would prohibit the ability to get money out of the country. And if the reason they would do that would be that the first inclination of affluent, sophisticated investors in that environment would be to flee the dollar and buy something else, buy Swiss francs, buy gold, buy Australian dollars, buy anything. When you're buying an Australian dollar or buying a Swiss franc or buying a Canadian dollar or buying gold, you're first selling dollars to buy said other investment. And in selling the dollars in that environment, you are exacerbating greatly the problem. You're increasing the velocity, you're increasing the inflationary effect. So the first thing the government would do would be to close the ability to get money out of the country if you saw that environment, which would exacerbate greatly the inflationary effects, kind of like a ping pong ball trapped inside of a box, bouncing off the walls, looking for anything to grab onto. And so, it's one of those deals where, kind of talking about what we were just talking about, buying stuff, hopefully never having to use it, it's the same thing. In order to be successful, in order to successfully evade that environment, you need to be proactive. And you would have to slowly divest of your dollar positions proactively, because otherwise, the dollar would lose value far too quickly, and whatever you were switching into would be far too overpriced rapidly. So, it's kind of like the great tulip bulb mania of the 1700s, where at first people, they started gaining value, then people started buying them, and then people started selling their cattle and then their entire farms and everything to buy these tulip bulbs. And then all of a sudden, the tulip bulbs became plentiful, and everyone tried to sell quickly and were selling as fast as they could, and the tulip bulbs collapsed in value because they were no longer rare. They became overly plentiful. Well, same thing would happen with dollars, and if all of a sudden everyone was dumping dollars as fast as they could, you couldn't get out of the country with your dollars, and you were trying to find anything to buy in the country, but no one wants them, it becomes a real big problem. And that's why you need to be proactive and mitigate your exposure to dollars proactively into things like gold, which, as far as I'm concerned, Sarah, isn't an investment. It's wealth. And so you could park your money in gold and silver during these times of uncertainty and view it as wealth, that no matter what happens, whether it be hyperinflation or, as Harry Dent says, massive deflation, either way, not only will gold preserve your purchasing power, in fact, people realize that gold will make money in inflationary periods, but it has also been proven to probably be the one single best asset to own in a massive deflationary scenario, because it is one of the only asset classes in the world that is not simultaneously someone else's liability. In other words, it's always worth something. And in a deflationary period, people are always hesitant to accept value. Counterparty risk becomes very, very important. No one can make good on their end of the deal, as people can't pay their bills, they're losing their jobs, they're losing their homes, they're going bankrupt. So counterparty risk is important. And so there's just as big of a camp out there who says we're going to run into massive deflationary problems. Harry Dent would tell you gold's going to go to 700, and we're going to experience the next greatest depression of all. And so whether you see hyperinflation or mass deflation, mitigating your exposure to the dollar and increasing your exposure to gold and silver right now is really a darn good idea. And I say that with as much objectivity as I can offer, regardless of the fact that I sell gold and silver. History has proven that to be an accurate statement.
Well, if the market hyperinflates, people are going to be thinking that the whole time. This is their gut, this is their brain not thinking, right? The emotional part, they're going to feel that they lost out on this big, huge gain in the market. Is there any benefit for staying in the market, at least for part of it, to gain during the ride up?
Absolutely. Yeah. Absolutely. I think there is. I think what you do is you develop a pyramid model of investing, where the base of your pyramid should be 50 to 60% of your assets, the middle portion 20 to 30%, and the top portion 10%. The base of your pyramid should be things like a paid-off home, cash in the bank, CDs or money market, precious metals, stuff like that. Very low risk, low yield type of deal. The middle portion, the 20%, could be things like utility stocks, throwing off a dividend, or short-term treasuries throwing off some income, or things like that are still conservative but throw off some yield. And the top 10% of your pyramid could be anything that you would consider, and you could even make that top 10% 20%, and the base of your middle portion a little less, depending upon your age. But the idea is that if you lose everything on the top 10 or 20%, everything, and you don't make anything on the middle, 10, 20, 30%, break even, as long as you're making your 1 or 2% on the base 50, 60, 70% of your pyramid, you never go backwards. And so, I think there should be allocation to stocks, especially in the light of possibility of the indices going much higher. Absolutely. But not enough to bankrupt you if you're wrong. And that's why we just want to make sure that the base of our pyramid is wide enough to sustain us through any outcome, whether it be inflationary or deflationary or whatever it may be. And that's a nice position to cash precious metals, and one that is free of debt. And really, in a perfect world, we grow the base of our pyramid as often as we possibly can, while all along adding little bits to the middle and the top portion, our investable portion. The base of our pyramid is our assets or our wealth, and the middle portion is becoming or becomes that in which makes us some money.
Yeah, because it'd be a mistake to put all our eggs in the market right now. I mean, that would be a disaster.
Well, I think you want to always avoid the big loss. To put all your assets into anything is never Finance 101, that's for sure.
Well, is there going to be a point where there's a signal to get out when you do have your assets in there?
I don't know. I mean, we live in a world where things move so darn fast. I don't know. It's I don't know if we're going to see a signal. Something would tell me probably not. That would be too fair.
Be too easy.
I think and I think the signal should just be the mathematics behind everything, and to realize that, sometimes you have to trust your gut. I think your gut will be your best signal, and the debt and interest rates and volatility and geopolitical events and all of these things happening, converging at once, is kind of the call, or is and that to me is, you don't have to get out, but mitigate your position, put it to a place where no matter what happens, you'll be okay, and you can weather whatever outcome. With all the uncertainty we have right now, I use that as my indicator, and but you can hear I'm being objective and saying I think the market could go much higher, but the risks involved, do they outweigh the possible gain? That's a question you have to ask yourself.
Well, if it hyperinflates, you need to be, because if you wait too long, you lose everything. But it's nice on the ride up if you get out at the right time. So how can people learn more about your company? Obviously, you provide gold and silver. Do you do more than provide gold and silver? I think you do alternative investments as well.
We do. We have storage around the world, in Canada and Europe. We publish a free daily newsletter at milesfranklin.com. Under the contact section, you can sign up for our free daily newsletter 5 days a week. It's highly informative. It is not a sales piece. So that's free. And certainly I can personally be reached Andy at Miles Franklin, or 1-800-255-1129 is the direct dial to my desk.
Excellent. Thank you so much for joining us today. I think it's very important right now.
It's certainly my pleasure, Sarah. And if I can be of any help in the future, let me know. I'll be happy to come back.
Excellent.
We don't have time to air this whole interview, so go to my website at sarahwestall.com, and you can hear the whole interview there or on the YouTube channel. And remember to subscribe to the YouTube channel. And remember to subscribe to the newsletter. The newsletter has all the shows that I've done over the last week and a half, and it gives you links to all of that. So you can always stay up to date on the new and fresh content that's coming out. I want to remind you, if you want to learn more about Andy Schectman and Miles Franklin, go to milesfranklin.com. There you can sign up for their newsletter that is not sales oriented. It's just pure good information. And they also have a blog where they're posting articles on a regular basis as well. So again, milesfranklin.com. So for now, everybody have an amazing day.